How do you get your business loan approved? Most importantly, how do you get approved for the most money at the best terms? Well, that's exactly what we're going to be talking about today. Today, I'm going to give you one of my five of my best tips to being able to get approved for the credit lines, the loans that you want this year and into next year. Look, we've helped going on 50,000 people through the process of building business credit, getting financing, and we clearly can see exactly what it takes to get approved. And during today's training, I'm just going to reveal 5 of my top tips that if you do these things, you're going to be able to get yourself approved for the most amount of money at the best terms for your business. So let's dive in. So a lot of factors when applying for a loan that you can control and a lot you can't, right? But surprisingly, the vast majority of why loans get turned down have to do with factors you easily can control by knowing the right kind of program you're looking at, the right kind of lender, setting yourself up to meet their standards before they apply, by tapping into little known assets you may have that you can actually use to be able to qualify for financing. All these kind of things are very important to actually getting approved before you apply. Now, there's some questions you're going to want to ask, and this is why I see most business owners fail getting capital, is they just don't know the answer to these questions. So before you even start to look for a loan, you should ask, what kind of loan do you need? Do you want a loan? Do you want a credit line, for example? Are you looking for a long-term loan, a short-term loan? Are you looking to provide collateral or just income or revenue? What kind of general loan are you looking for? What do you need the funds for? That's going to determine what kind of financing you get. Look, if you need to get money for something you're going to pay off quickly, well, then a credit line might be better for you. But if you're going to use the money for something that you're going to put in place, something you're going to buy or do now, and you're going to need a lot of money, then a loan might be better for you. Maybe you're going to come in and you're going to use the money to buy something, but you're not going to need to actually use that thing, or that thing won't generate revenue for months down the road. Well, then you might want a credit line because you don't want to start paying payments on a loan that's not going to generate you a return in the short term. So things to think about. What type of lender do you use? We'll dive more into this. Do you even qualify for a business loan? We'll talk more about this today. Are there other funding options that work better right now? There's a lot of different kind of funding over there, about over 50 plus core types of funding products. Are you looking at the right kind? Can you afford a business loan? Is a credit line better? What kind of payments, what kind of rates can you afford? So some general questions that you want to think about before you dive into the process. Now, you got to be intentional here. You don't want to just passively have these things in your head. Where you go to get financing and how you get it really is having clarity on your end goal. As a matter of fact, that's what I found in business usually is the problem, is that somebody sets out to do something without clearly understanding the goal of the intention. And what I've learned in business here at Credit Suite is that whenever we get in that rabbit hole, we immediately bring ourselves back and say, what is the goal? What are we trying to accomplish here? Same thing with a business loan. You got to really know what your goal is and what you're trying to accomplish. What are you going to use the funds for? How soon are you going to need the money? How much or how much money are you going to need? How soon? When are you going to be able to afford the payments on that? Or is what you're using the money for going to help you cover the payments? There's just so many of these variables that you need to know before you really even start to dive in to get financing. So let's talk about the tips. Once you know the answer to these questions, well, then these tips are going to help you get a very good, going to help you get the money you need and also help you get it at the best terms. So let's talk about step one. Step one is always the number one thing I talk about when it comes to getting money for your business, which is your business even set up where it's fundable? Look, the vast majority of applications for loans, credit cards, and credit lines are not denied because you don't qualify. It's not your income. It's not your credit score. It's just simply the lender's looking at a very basic preliminary check of your business, and you're not passing it. That's what it comes down to, because of really basic, simple mistakes that we overlook as entrepreneurs. And so this is the very first thing. Does your business name and contact information match everywhere? Is your Facebook contact us page the same as your website, the same as Bing, Yellow Pages, Google? Most of the information's not congruent. It's all over the board. And this incongruency can oftentimes will get you denied for credit and financing. Do you have a business phone number? You never want to use a mobile phone or a home phone. Do you have a business address? You don't want to use PO boxes or UPS addresses. Home addresses are okay, but some sources like, for example, Walmart won't approve you if you use a home address. So some things to keep in mind. Does your business have an EIN number? Do you have an entity set up that's not a sole proprietorship, a corporation, an LLC, something like that? Do you have a dedicated business bank account set up? Do you have any licenses that you can get for the business? Do you have a merchant account set up? These are just basic fundability or credibility standards that lenders look at to even make sure you're a real business. So for example, SBA says a sole proprietor is somebody that's just testing a concept. So SBA is saying that they don't even consider sole proprietorships to be real business entity types. So that just goes to show how one thing like an entity type can adversely affect your ability to get money. You got to get fundability right. And I'm not going to dive in and decode a lot of this today. If you go to youtube.com/credit suite or just search fundability on YouTube, you can easily find extensive training where we've broken down everything you need to know about fundability, including NAICS codes or industry codes, amongst many other things. So if you're just tuning in, make sure you give me a shout out, say hello. I always like to say hi to everybody. Thomas, thanks for coming in and saying hello. I appreciate you tuning in. All right, so you got to make sure that it's set up where it's fundable. You need to have a website. You can have an email address that's congruent with your website. Basics of fundability. You got to get that right. Step two is you really want to consider two other things. You want to consider having some kind of asset that can serve as collateral, whether it's yours or somebody else's. And you also want to think about guarantors as well. And the reason for these two things is these open up tons of funding options for you, and most business owners don't think about them. So, for example, most assets can work as collateral to get financing. Stocks, bonds, 401ks, IRAs, inventory, equipment, residential real estate. You may be interested in flipping. Commercial real estate, vehicles can serve as collateral as well. So account receivables where your people pay you on terms, purchase orders. Most assets that the things a business has or you have individually that considered an asset can be served up as some kind of collateral. And here's the best part. It doesn't have to be your asset. It can be somebody else's. You can use somebody else's stocks, bonds, 401ks, IRAs, equipment, inventory to qualify for financing as well. And you can also use somebody else's credit to qualify as a guarantor. So we have a great program called Credit Line Hybrid where our business owners get credit lines of $50,000, $100,000, $150,000 at 0%, right? And the interesting thing about this is half of our clients, have bad credit, and they're using a guarantor in order to get approved and qualify. And the reason this is important is 75% of business owners statistically get money from family and friends. Well, it's easier to get money using their stocks, their bonds, 401ks, inventory, equipment, or even using their credit than it is to get cash from them. And I always use the same example. If I was to go to my dad and say, hey, Dad, I need $25,000 to get a business off the ground, my dad would help me. But in order to help me, he'd go sell stocks. Now he'd have tax penalties. Now he wouldn't be earning interest on those stocks. But I could go to my dad and say, hey, I need 25 grand to start a business. Hey, by the way, keep your stocks in place. I'm just going to get a credit line leveraging those stocks. You still get the stocks. You still earn the interest. And then I get a low percent interest credit line that I can use to grow the business. I'll even give you a rate of return or pay interest or whatever reward you may give them for letting him do so. Hey, Dad, you mind if I have you signed as a guarantor? That way it won't adversely affect your credit. A lot of these credit lines report to the business credit reporting agencies, but I can get the money I need without you, liquidating stocks and taking money out of your bank account. Look, all I'm saying is 75% of business owners get money from family and friends. And if you're going down that road, it's way easier to tap into other people's assets or credit to get the money instead of just depending on them to give you a bunch of cash. So whether you are using your own assets as collateral, whether you're using somebody else as a guarantor, these are definitely things that you can consider that open up tons of funding options. And what I mean by tons is I can think off the top of my head about 20 different types of funding options that this one thing unlocks that most business owners don't even think about. So think about anything you have as an asset that can serve as collateral. Grandpa's old backhoe in the backyard, for example. Anything is an asset that can serve as collateral that you or somebody else has, and people around you who might want to help and be a guarantor. Look, I'm not saying you're taking handouts or asking people for help for being a guarantor. Your family member, friend, potential investor, they may want interest on the money they're lending you or letting you get access to through their credit. They may get a rate of return. They may take ownership interest in your business. Okay, so they might come in and have a small slither of ownership interest in your business. So it's not like you're just taking somebody from someone. They might actually get a benefit here by you tapping into their credit, their assets in order to be able to get funding. So some things to think about. Christopher, thanks for coming in from Vask Tech. I appreciate it. And Cornelius, what's going on? Eric, thanks for saying hello. Charlene from YouTube, what's up? Thanks for coming in. If you're interested in improving your fundability, I'm going to throw up a quick link. You can take a screenshot to this. We've got a great fundability mini course, since I'm not diving into fundability a lot today. It's on the screen, completely free, 3-video mini course that teaches you everything about fundability as well. So something you want to check out. Now, tip number 3 is to evaluate and improve your business credit. Look, if you want to get a mortgage as a consumer, if you want to get a credit card or a car loan, you and I both know they're always going to pull your credit. It's always going to happen. But the crazy thing is in the business world, for some reason, entrepreneurs lose sight of this. And you don't realize that whenever you go to deal with a supplier, an insurance company, a lender, a credit card issuer, they're all pulling business credit the exact same as they do when you were to apply for something like that on the consumer side. The reason business owners don't know this is, as a consumer, there's a law called the Fair Credit Reporting Act. And the Fair Credit Reporting Act says that if I pull your credit and I deny you for a loan, I have to tell you that I pulled your credit, which credit bureau I used, and what information on that credit report I didn't like that caused me to deny the loan. That Fair Credit Reporting Act doesn't apply to the business world. So lenders, credit issuers, suppliers, insurance companies, all these people are pulling your business credit reports and making all kinds of decisions about you. And you don't even know that it's happening because they're not telling you that it is happening. They're not actually coming in and telling you that they're doing so. They don't have to. But you need to know it's very important. You got to build business credit with Dun & Bradstreet, Equifax, and Experian, because it goes a long way to helping you get approved for credit financing and getting approved for the most money at the best terms. Now, one of the first steps is you want to get set up with Dun & Bradstreet. You want to get your DUNS number. You can go to creditsuite.com/DUNS to be able to get that as well. Then you want to get some starter vendors. Places like Granger or Uline or SupplyWorks can definitely do the trick. And then that is going to build a foundation where you can start then getting retail credit, Amazon and Walmart, and fuel cards for repair and maintenance of fuel vehicles, Visa card, MasterCard, auto financing when you have about 14 accounts on your business credit reports. So by building business credit, really there's a couple things you do. First, you give your lenders and credit issuers a really solid credit profile where they want to lend you money. They see you're established. They see that you're getting credit, that you're paying your bills as agreed. But the second thing is it helps your business fund itself. Even if you can't get any other kind of loan or credit line, by building business credit, it still positions you to a point where you can get all kinds of high limit credit cards just using your business credit. Just because you created the asset of a business credit profile, you can then use that asset to get all kinds of other credit cards and money. So business credit gives you the ability for your business to fund itself. And then it also helps make it easy for the funding you get to get approved, and helps you get approved for the most money at the best terms. Thomas says, like, get a person or team join as an expert in this field for group to team with others already here and understand it. Yeah, and we've got great communities where you could do that as well. We've got a great Facebook group called Get Business Credit. And with Get Business Credit group, you can basically, there's about 50,000 plus people in there that are all on the same mission to get credit financing. That's a great place to check out, where it's basically a community. That's exactly what you're describing, that works together to be able to get money. Also on the screen, I threw up a link to Credit Line Hybrid. I did talk about that. If you have a guarantor, or if you have good consumer credit now, you can get a $150,000 no-doc credit line at 0% rates, and you can take the cash out at 0%. It's pretty crazy. It's called Credit Line Hybrid. I threw that link on the screen so you can access that as well, just so you know that that is there. And speaking of business credit building, here's a great guide I'm throwing on the screen too. It's 100% free. I don't know. I guess today is free resource day because I'm giving you tons of free assets and resources. But you can go right here to creditsuite.com/EIN. And this is a step-by-step business credit building guide. It walks you through step 1, fundability. It walks you through tip 3 here of building business credit. So that guide I threw up on the screen is really going to help you. It goes a long way to helping you get business credit financing. By the way, are you getting value? If you're getting value, hit the like button, hit the love button, subscribe while you're at it, because this is all we do is talk about the easiest ways to be able to get you the capital that you need. Okay, so tip 4, you got to research lenders and you got to research products. So here's the deal. Well, the reason that I see most business owners not get funding is they don't know these two things. They don't know what kind of product works for them. And then they don't know what kind of lender to go get the product from. So let me give you an example here. There's all different kinds of loans. So it's what's called traditional loans from traditional banks. And these are SBA loans. These are Chase, Bank of America, Wachovia, or not Wachovia, is not around anymore, Wells Fargo, and Regions, your major traditional banks. So that's one kind of funding you can get. And these require good personal credit. They require cash flow. They require that you have some kind of collateral as well. You need all three of those things to be able to qualify for these kind of guaranteed SBA loans. But they give you long terms and they give you low rates. So your payments stay very low. There's lines of credit. Lines of credit typically revolve better personal credit as well. So again, if you don't have good personal credit, it's going to be tough to be able to come in and qualify for a lot of lines of credit. Now, there are non-traditional lenders. These are fintech lenders, alternative lenders. These are the ones that you're going to love because they focus on a strength in your business, not your overall business. So the best way to know what kind of loan product you can qualify for, really simple. I'm going to teach you a formula that you're going to know in seconds what you can get. I call it the 3 C's cash acquisition formula. Here's why. Lenders want to see one of 3 things: cash flow, credit, or collateral. Let's break these down. If your business has consistent cash flow, then you want to look for cash flow lenders, merchant cash advances, cash flow financing, a fund box credit line at creditsuite.com/fundbox. If your strength is not cash flow because you're a startup, let's say you're just getting your business off the ground, well, maybe you have collateral. Remember, we talked about that earlier. Stocks, bonds, 401ks, IRAs, equipment, inventory, commercial real estate, vehicles. Any kind of collateral can serve up as funding. The third type of C is credit. You either have good established personal credit. We talked about credit line hybrid that you can get approved for. Or the other thing is that maybe you have good established business credit. That can qualify you for all kinds of credit as well. So let's look at this 3 C's formula and break it down. The nice thing is when you have one C, you don't need the other 2. So let's say I'm a startup with good credit or a good credit guarantor. Well, then I can get credit-based financing. That's my C. Let's say because I don't have cash flow. And if I have good credit, I don't need cash flow. I don't need collateral. I don't need the other 2 C's if I have one. Okay, let's say I have collateral. I have stocks. Well, then I don't need good credit. I don't need cash flow. I can get it even as a startup business. Let's say I have good personal credit. Well, then I don't, or I have consistent cash flow. I manage my bank account responsibly. Well, 6 months of that, I can get PayPal, Square, Stripe loans. I can get a credit line through Fundbox at creditsuite.com/fundbox. Merchant cash advances, revenue lending all opens up. So for these alternative non-traditional lenders, I only need one C: cash flow, credit, or collateral. Now, if I go backwards here and I look back at SBA loans, lines of credit, traditional bank financing, they need all 3 C's. You got to have good personal credit and business credit. You got to have tax returns that show consistent cash flow. You have to have good collateral to offset their debt. So this is why bank loans, traditional loans, lines of credit, SBA loans are so hard to get, because you need good credit, cash flow, and collateral. Most business owners don't have that until you're really longer in business and well established. So if you don't have good credit and cash flow and collateral that's verifiable on tax returns and assets that can serve as collateral, all that stuff, then you want to go with these non-traditional lenders. So you really want to choose wisely. You want to figure out what's required to be able to get approved for each one of these sources. Like I said, cash flow, credit, or collateral. Then the next step is to find the lender in that space. And I just made it really easy for you, because now if I go to Google, I'm not typing in get a business loan. Now I can go to Google and type in, I want securities financing using stocks and bonds. I want 401k financing for a business. I want, credit line hybrid for a business. I want to get cash flow financing for a business. And just by typing that into Google, now you can just start narrowing down lenders that just do that specific kind of funding. And of course, feel free to give us a call and we can help you too. We never charge you a dime of money to help you get funding. So we can help you find the right funding program and the right funding source as well. Plus, I've made it easier for you to understand clearly the kind of funding program you can get but you'll do a little bit of digging to figure out the right lender for you, unless we can help you. Okay, now you can also go to creditsuite.com/live-27. That's at the bottom of my slides right here. It's worth taking a screenshot of this because this resource has 27 different ways you can get funding for your business. 27. So it's a plethora of different funding options you have that can get you the money that you need to be able to grow your business. And Thomas says, we can make the one with need marketing around country very known. We'll talk again. That sounds good. Andrew, I was told by Credit Suite they can use a 401k that I'm not contributing to anymore for collateral, but not stock. I have stock, not 401k. So may you elaborate a little bit more? Sure, absolutely. If you have $30,000 or more in securities or in a 401k, then we can help you. And if somehow that message got mixed up, I'm sorry about that. If you email us info@creditsuite.com or give us a call, which our phone number will be on the bottom of these slides and on the end slide as well, we can help you with that. But you just need to have $30,000 in a 401k or stocks. If you have that, we can guide you to sources on the security side or the 401k side. So again, my apology if that got confusing. Is it me or the slides blurry? I'm thinking it was mine. I think it definitely is. I haven't heard that complaint from anybody else, just so you know that, John. So I think it might be on your end of the resolution. Everything looks good on my end, and I haven't had anybody else comment. So I think it's something to look into on your end. Tip number 5, have a workable professional business plan. Look, you need to have a professional business plan. And there's a great source, I think, online called liveplan.com, or LivePlan, I think is the name. But a business plan is really valuable asset to have. But don't get me wrong. All the lenders on the non-traditional side, the alternative lenders, the fintech lenders, they don't care about a business plan. They're not going to ask for it. SBA might, alternative lenders aren't going to. But a business plan clearly helps you understand exactly what you're doing, where you're going, what you're trying to accomplish, what you're going to use the money for, etc. Now, if you go to youtube.com/Credit Suite, type in business plan, I've got everything you'll need to put together a business plan. I got what you need there to put together a pitch deck, everything you'll need to do this. But your business plan should have things like an executive summary, a description of the business, the strategies, the market analysis, an analysis of the audience, a competitive analysis, a look at your competitors, plan for design and development of what you're going to build or what the company's going to be, operation and management, financials. A business plan is basically an overview of everything you should be thinking about when you grow a business, and it's very important. Just the analysis of your audience is very important. If you're going to run ads on Facebook or Google, just knowing your customer avatar is essential to getting your ad cost to be $5 a lead versus $50 a lead. So that's just one example. Competitive analysis, seeing what your competitors are doing and how they're succeeding and mimicking part of that to be able to succeed yourself. I mean, there's just a lot involved with growing a business that having a professional business plan can definitely help you with. So make sure you get this done, and a lot of information on our YouTube channel that can help you with that as well. So simplest way to ensure you can easily get the funding you need for your business, you got to build that fundability. That's number 1 of the 5 tips I talked about today. If we can help you along the way, feel free to give us a ring. It's 100% free for us to help you with funding. And we've got a business credit solution that is an investment, but we can help you build business credit 4 to 6 months, cut years off the process. So if we recap, if you're really looking at getting approved for loans, there's a handful of tips you should know. Choosing the right product, choosing the right lender, knowing what your end goal is, considering a collateral or a guarantee, having your business plan nailed down, building your business credit as well. These things all become very important to helping you get the most money at the best terms. Now, next time we meet, we're going to talk about personal credit, what you need to know, how personal credit ties into financing, and everything you need to know to be able to improve personal credit and where it can help you get different types of loans and credit lines for your business. We're also, keep in mind, if I can ever help you with financing, give me a call. Okay. We don't charge you fees for financing ever. We don't charge you points, and the lender doesn't roll in points. We don't charge you anything. And we do so much volume with lenders. We use the volume we do to get you cheaper pricing than you'd ever get on your own. And we'll develop a blueprint for you to go from like alternative financing up to SBA financing as well. So our idea here is that you never need to worry about getting money. If you need help, you just give us a call and we'll talk through what your funding options are, and we'll help you get figure out what the right funding program is, and even get you directly with the right funding sources. So if we can give you a call, if we can help you, give us a call, 877-600-2487. We will pre-qualify you for funding, cost nothing to do that. We'll do a fundability assessment to help you fix your fundability, know what's wrong there. And we'll even get your business credit reports for you for free. It saves you $250, and we'll go over those with you and give you tips and tactics to be able to build your business credit as well. And somebody says IRA work as well. Yeah, stocks, bonds, 401ks, IRAs, that could definitely work. And Andrew says, I only have 10, which is why. Yeah, that's why. So when you said, hey, I asked about securities financing, you couldn't help. It's because most of the program for securities financing and 401k has a minimum. You've got to have 25 to 30,000 in there. If you don't have that, Andrew, then it's not going to work, which is probably what you're saying that the problem is. And Samuel, thanks for coming in from Jacksonville. So again, if we can help you with a free consultation, here's our information. I've got that pulled up on the screen. And if you got value here, hit the like button, hit the love button, share this, as well as make sure you subscribe on the channel you're watching on. We go live Tuesday and Thursday at 1, 11 o'clock on Wednesday on Facebook, our Credit Suite Facebook page, our Credit Suite YouTube channel, and my LinkedIn profile, Ty Crandall. And then we have daily tips on Facebook, Instagram, and on Twitter as well. We have 1-minute video tips on Insta. We have 1-minute video tips on TikTok, thousands of videos on our YouTube channel, and a podcast you can listen to on the go. Tons of resources that will help you get the money you need to grow a business. All of those are at the top right of our website, creditsuite.com. So creditsuite.com, access that, like and subscribe, and that way you can get the most money at the best terms for your business now and through all stages to be able to grow a really successful 7, 8, even 9-figure business. So thanks for tuning in. Look forward to seeing you next time on our next live training, where we're going to be talking about different ways you could tap into credit to use to grow a business. And Dan says, hey, Dan actually just says, hey, Ty, when starting an LLC for real estate, is it better to name it ABC Enterprise or Equities rather than ABC Properties? Well, Properties is better than Equities. Equities automatically put you in a financial services category. So if I was choosing between those two, I would go with Properties versus Equities, because Equities will automatically put you in a financial services category. So some things to think about. Great question, Dan. So thanks for tuning in, everybody. Have a great day. And a lot of your questions, like Dan asked here, become answers that I answer in 1-minute tips on Insta and TikTok. So check us out there, because a lot of the questions you have, I'll be able to answer in 1 minute if you're checking out those channels. Thanks for tuning in. Look forward to seeing you on our next training, where we talk about more cool ways to get money to start and grow your business.